my plan hit Monday, so I was done. But for everyone else, hopefully you guys had a good one.
Yeah,
This week is super easy setup.
yeah.
Super easy setup.
Um, so welcome in, everybody. Another Sunday prep here with Andrew and me. Hope you are doing good. You have been doing good. Let's kick off as usual with the macro side of things, and then the usual flow will continue with Andrew taking over after, and then we'll talk about technical setups. We'll talk about all the ticker requests. And that's how we will end today's session. So starting off, let me show my screen quick. Okay, nice. This is independent to everything else that's happening. Ethereum is breaking out. Bitcoin has also broken out. But you're seeing a little bit of residual momentum start to take shape here. Ethereum is obviously a nicer setup, but you don't have confirmation that this thing is back in the uptrend just yet. With Bitcoin, you don't have confirmation that this thing is back in an uptrend just yet. This could all be just another high here. You do not know. But I just wanted to talk about the appetite of cryptos in general, because this feeds into the market's risk-taking mentality that's going on right now. And that's the focus that I'm trying to shift. So when you look at the S&P 500 from last week, we spoke about, when I started the webinar last week, I told you guys, are you ready for SPX 6000? And we're still on the journey towards that same thesis. There is no reason to think otherwise yet. We have had a handful of rejections trying to creep into the potential rejection of the 38.2 extension, naturally the 5900 psychological level, which once we break through this, then allows us to move into the 6,000 target that we are looking for before a significant pullback happens again. With the NASDAQ, now, and you can see, since SPX is where it is and NASDAQ isn't, it hasn't broken out into an all-time high, the breakout within NASDAQ is likely to push SPX higher. And this will all mostly be contingency on how the big tech perform in this earnings season that's coming up. So the market's kind of like throwing a bit of a tantrum slash fit that maybe these companies may underperform. But we've seen some really good performances so far already, right? We have Netflix that really did amazing earnings, despite clamping down on their subscriber view base and all that, increasing prices. You can see that they had net addition subscribers. Market really liked that one. NVIDIA earnings to come, but you guys know I've been talking about NVIDIA for a whole 2-3 weeks now. Massive, unusual options activity, almost to the tune of, and it still doesn't stop, but to the tune of almost 200 million at this point. Now, could that be a big hedge position? I simply don't see it as a hedge position. I think if it's that big, everybody's trying to make money off it, right? So a move will happen. It's when it's going to happen. All of the options were bought for March, so it's really far away. You don't know if there will be a shakeout in the meantime. So just putting all of these conditions out there so that you don't get in a confirmation bias. Remember that as much as we want to fantasize about, it could go to 180, you also have to keep your mind in check and not let greed take over. It's so important, right? So take calculated risk. If it breaks out 140, bounces on 140, you can play the upside. If it rejects 140, take that downside, right? Play either way. Just be nimble. Don't get stuck to one idea is what I'm trying to say. But NASDAQ will likely break out, and then that pushes SPX out further higher into the 61.8 extension, potentially at 6,000. That's my thesis. Along the way, of course, there will be pullbacks. There will be volatility. But right now, the trend is still up. So there's no reason to think otherwise. If we start rejecting multiple times here, on the daily, which on the 4-hour, we're still making like an upward pennant. If we start rejecting here heavily, then I'm inclined to start taking a short position or hedge. But right now, nothing yet. Now, what are the other two thematic things from the background that I spoke about last week that I want to continue on? Two things. Number one, the 10-year yield. Number two, the dollar index. And you can see two of these have a significant shift of structure this week. From last week, we went from making higher highs and higher highs and higher highs and higher lows. And now you're making your first higher low. And now we need to confirm if this is making a lower low, which will then send us in a downtrend for a little while, right? Or a corrective territory, either way. But you can see that that developed last week. And the same thing is happening on the dollar index, right? With the dollar closing with a very bearish, almost no wick candle. You see that, right? You learned that in your candlesticks classes, but do you apply it? Right? That's the question. Are you applying the knowledge that you learned? This is a very strong bearish candle, right? For example. So that shows momentum is potentially shifting here, right? Of course, we have to go further down in order to confirm that, make another higher come back. But the point is, this going down back again and this going down back again at the same time is great for this and it's great for this. Great for SPX, great for NASDAQ. So everything is setting up. All the green lights, like how I talk about, are slowly showing up. And once that happens, the market's going to go boom, right? So understand this, okay? That's what I have from the macro perspective. I think there are a couple more detailed things on like technicals, but I'm going to let Andrew, cover his part here because I think he might want to have to say a few things about this as well. And then we can talk about, the rest of the technical. So I'll mute myself right now. It's over to you, Andrew.
Okay. All right, here we go. Okay, so real quick, let's recap last week where we were at. So if we go back to the playbook, it's going to be important because, again, every week, right, it builds. So if we look at last week real quick and we go to last week's playbook, we can see that we didn't get a pullback like we were hoping. Price broke over 580, which then the buying pressure kicked in and we pushed right up into 585. Okay. This is important because pretty much after Monday, we didn't really do anything else from a data standpoint. We then rejected 585, came back down into 580 where the buying pressure was. We pushed back up into 585, and then we had a small pullback, and then we pushed back up into 585, which creates, if you guys have been in the group for a while, what we like to call a double top emotional fuckery breakout, right? Where you have three different types of traders coming together, colliding, which then could create a squeeze situation into the upside. So this is important because these levels are still important today, right? 580 and 585 being the two main levels that you should be paying attention to. Okay, so if we take a look at this week and we move into this week, here's our range. We're looking at 589.86, so you could say 590, and 578.46 to the downside. Okay, so not a huge week from an expected move standpoint, but 590 is kind of that level that echoes to me, right? If we take a look at the algos, kind of bearish, maybe hinting at a small pullback. We'll have to wait and see. Again, it's going to come down to 585. Nothing really from a NAMO standpoint. Rotations, I echo the same thing that T was just saying. If you guys remember last week, I talked about technology is kind of this lagging sector here. And with mega cap earnings kicking off really heavy this week, looking for that break over 500 on QQQ is going to be important and could lead to a bigger push from the market. So we'll have to wait and see. You can see here, I have the two charts. This is NVIDIA, obviously one of the top holdings, echoing again what T said, which is 140. Now, I will add to this, if we take a look at the gamma level here real quick on NVIDIA, I'm sure someone's going to ask me about this when we get into individual tickers. You can see that 140 is the biggest level. And if you break 140, your next level is 150. So very easily, if tech is bullish this week, and NVIDIA and semiconductors make a push through this 140 level into price discovery, 150 would be the target that I'd most likely be looking for on the short term. Now, if we take a look at QQQ, right, we can see that the biggest level of exposure is 500. So that would be, the main thing that we're looking for from a tech standpoint is, can we get into 500? Can we close over 500? And then we would like to see this 510 level start to build up more. Okay, so if we go back and look at the picture now, we can see there's the 140 level. And if you clear that, then this most likely makes a push up into this 150 very easily, as you can see from the gamma. And then if you take a look at tech in general, here's QQQ, there's 500. We have yet to have a weekly close over 500. So if the week closes over 500, it's a good indication, right, that we're seeing money rotate back into tech. Tech goes into price discovery, which is lagging the S&P 500 right now. And then the market could potentially go even higher, right? So those are important things to keep in mind as you're looking at this. Now, if we take a look at the seasonality, we can see that historically, the back end of October is bullish up into the early part of November. So we kind of have this similar setup here on QQQ, where we kind of are at this high and we haven't broke it yet, whereas SPY is already pushed up into the all-time high territory. Okay. And if we look at seasonality, November is normally a stronger month for us than September and October. So again, pushing into that narrative that if tech breaks over this 500 level, yes, the market could go higher. Are we in extreme greed? Yes. Is the market a little overextended? Yes. That could lead to small pullbacks, but we'll get into what key levels to pay attention to as we get into that. Now, the two important things to understand is the environment. So we are in a positive gamma environment. You can see here that 585 is the biggest level. 590 is the second biggest level. So if we break over 585, we go deeper into positive gamma. We also have dealers with negative delta exposure, right? So what does that tell us? That tells us that market makers are buying the dip. Okay. So now go back to the price action that you saw last week when price came down into 580 and it got bought up and pushed right back up into 585, right? When dealers are positive gamma and price decreases, their deltas decrease and they must buy more shares to hedge. So I call this a buy the dip environment, right? Where the market just continues to melt to the upside. Now there's one expiration really important, and that's 1025, and it's this 580 exposure. So if we take a look here, we can see that market makers are heavily short 580, which means they're getting squeezed on these positions. Now, these positions expire this week. So this will change what next week's plan looks like because all of this buying pressure will go away. But for this week, as long as we stay above 580, market makers have to buy shares in order to hedge their risk on this position. So unless we break below 580, I'm bullish. Okay. So that's the important thing to understand there. So if we take a look now at the plan, we can see, we'll go into a smaller time frame here. There we go. You can see here on the 4-hour, you have yet to have a 4-hour candle close above 585. So very simple evaluation there for you, right? You're looking for a 4-hour candle close above 585 to trigger this move into the upside towards that 590 level. I always like to see a pullback, so I wouldn't mind if we got rejected at 585 and came back down towards this 580 level to get a better buy and a better position. We'll have to wait and see what happens with the price action this week. But 585 is going to be that key level to pay attention to. And if we can get over that 585 level, then we're looking for that push up into 590. Okay. We can take a look at the data here and you can see it. SPY. Here's your levels. There's 585. There's 590. You can look at individual weeks, right? That's November 1st. There's 585. There's 590. You can look at the 15th. There's 590 as the biggest exposure. So again, over 585, looking for that push up to 590. All right. T, you want to add anything?
Yes, I need to add a whole bunch of things actually. I actually resonate with your setup a lot, but I just want to show the other part of the background. So let me just
Yep.
share something real quick. Wow. Okay, let's see. Can you guys see my screen?
Oh, let me stop. See, there you go.
Okay.
I can see your screen.
Just echoing exactly what Andrew was saying. Another thing that I want to bring your attention to, which is the overall theme is still bullish, right? As we are both echoing, but the important thing is that expect some kind of a pullback in order to clear out liquidity to make room for that move. So one thing that is of particular note is the anti-VIX indicator. I'm not sure if you guys are familiar with this, but essentially a very simple indicator that gives you the inverse of volatility. And whenever it's up here in the red, right, that means that the VIX is ready to be bought. And when it's down here, it means the VIX is ready to be sold. So it's the anti of what the VIX does. And you can see that the VIX is ready to be bought here. So it being suppressed and being pushed down here in the past couple of sessions, expect some volatility. But that doesn't mean that price action will come down and then stay down. So that's the important thing about volatility. The exception for that case is that when it does come down, you want it to be bought up quickly. And that's the benefit of having that high volatility. So you will get a opportunity, okay? One thing that I want to mention here is I know a lot of you, despite us going over this scenario and all of these preparations, what's going to happen during the week is something out of the ordinary will happen. Maybe SPX runs higher or SPX pulls back, right? SPX pulls back. I think most of you are aware of what the plan is. We probably will take a long position. But when it breaks out, a lot of you get frazzled by, hey, what do I do now? Do I chase this? Do I FOMO? What do I do? So my way of looking at it is don't take the upside, okay, until and unless you see the downside move. Very simple rule set for yourself for this week, okay? Don't take any upside move without seeing a pullback first, which will come. You just need to be patient, okay? And that way you won't have to second guess yourself about what do you do when it's out or something like that.
I don't like the two different versions.
Okay. Now, next thing that I want to point out, sorry, background stuff once again, but really important is the prime book report from this week. And you can see that Infotech net bought at the fastest pace in 5 months amid the start of a earnings season. Hedge funds net bought US info stocks, which means tech, in other words, for the 3rd week straight. Now, you guys know my way of looking at these reports. Whenever I see flow coming in for 1, 2, 3 weeks, I will tend to just count it as temporary rotation. But the moment it gets into the 4th week and the 5th week, that's when I'm starting to anticipate that a move is about to start. And so you'll see that now Infotech is starting to pop up on the radar. And what is some of the biggest flow that's being moved by prime brokers, which is the people who move assets for mutual funds, hedge funds, is Infotech. So some of that crowd is coming back into Infotech. Nearly all subsectors, sans software, blah, 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 led notional terms by semis, tech, and comm equipment, okay? And you can see it makes up a 16% of overall US net exposure, which is an important part here. And then you can see on the other side, hedge funds net sold US consumer, discretionary, and staples combined. So this is kind of what has been keeping Amazon down, right? And keeping a couple of other names down as well for the 5th straight week. So that means this trend is now going to intensify, but it's towards the tail end of its trend, right? The rotation's on its way out. Where is that rotation on the way out going? It's going into tech. Understand how this works, right? Understand it. So now you can read the rest of this on the Discord. I'll post it on both the Discords to get a deeper understanding. But just in the interest of time, I don't want to overcrowd too much of information in one sitting like that. You can read that on your own. And the last thing that I want to go through is the weekly sector sentiment. Now, these reports, really put it together nicely for you to just understand quickly where the sectors are at. So let's go through them very quickly, rapid fire round style. You can see basic materials, just kind of still in a uptrend, bouncing off. So this sector actually might be bullish for a short term. For biotech, I kind of ignore this sector completely, don't trade it at all. Consumer discretionary, you can see, as the report you just read, they've been keeping that pressure down on it. So I expect the pressure to continue falling down. Expect a bit more liquidity space to be created as consumer discretionary comes back down. When it gets back into the 2030 levels again, that's why we can start taking upside exposure in the sector again. Consumer staples, this one's on its way up from after being down for a while. So expect legs in this one. Energy, you can see, is rejecting and coming back down, right? After a big, massive move to the upside, it's kind of moving the other way again. Financials, approaching its previous high and momentum. And then you have, so essentially you have consumer discretionary and consumer staples here as the two sectors that I would want to look at for upside positioning. And then healthcare as well, right? Housing, kind of, yeah, I guess so, yes. Industrials, no, not really. It's at the top of its life cycle, right? I would expect industrials very difficult for it to break out here because the momentum has been wound out so much. And then mining is kind of topish. Oil producers is topish, the same with energy. REITs on its way up. Semis, look at that. It's squeezing, right? And retail just sideways, technology squeezing. Both semis and technology squeezing. You can see they're squeezed, and utilities on its way back down. So in a snapshot, instead of doing the whole like XLK, XLE, this is just so much easier to look at, in my opinion, right? So I'm gonna just leave it there. I think the most important sectors will be consumer discretionary, consumer staples. You'll see some potential bullishness in there. And then REITs, which I don't think many of you trade. And the two most notable ones will be semis and technology because these are wound, very highly coiled right now. All right, that's all I have.
All right. So now let's get to your guys' questions. So what tickers do you guys want to take a look at? What do you want me to see? Shoot me your guys' questions. Let me share my screen.
You guys for this week.
Here we go. Baba and SMCI. So Baba did exactly what I expected. Super easy. 100 is your level. We expected a drawdown here and a bounce off of this 100 level. So 100 is the level to pay attention to. You're back testing the breakout here. So we'll have to see if this holds. But if 100 breaks, I would expect it to come all the way down into possibly like down into like mid to low 80s. But we'll see what happens here off this 100 level. This is your biggest level, so pretty easy evaluation there. If you lose 100, you're in trouble. So I think it's going to bounce here personally, but so far, nice little move there. We'll see what happens. SMCI, that was alerted a while ago. Let's see. Nice little bounce off that order block. Still hasn't quite hit the golden pocket here, which is sitting up at about 158 to 155. So that would be my guess here, would be a push up into this area. Oopsie. Let's get this perfectly. There we go.
I like the crypto plays right now, honestly.
Yeah, so and then you got an easy little pivot here. So little pivot right there. right? And a break over that pivot, you're most likely looking at 155 to 158. We'll just double check the data real quick, make sure we're lined up. And there's 150. So we'll put a gamma resistance at 150. And that'll be right where it's basically at. Right there. So yeah, over 50 looks good. That's what you're looking at there. All right. ALGN looks consolidating around 220. Thoughts for earnings. Earnings is 50-50. So I will not give you thoughts on earnings. But this is where I like to apply risk. So if we go here, there, right in the golden pocket. But earnings is 50-50. So as long as your earnings comes in good, it's not a bad place to apply risk, but earnings is 50-50. So there is no real edge that you can get from technical analysis on an earnings play. That would be my target, though, 248 to 252. That's what I look for. Oxy, Amazon, bullish case. Oxy hasn't changed. So I apologize if you guys don't like the information, but sometimes things don't change. So Oxy hasn't changed. We got our pullback into the golden pocket as we wanted. You guys can see that this was drawn out a while ago. So you'd be looking for a bounce here. We're going to get rid of this circle here because this fake breakout's already played out. So you're looking for a bounce here, obviously off of this golden pocket area. I think you have 50. Yeah, 55 is still the main level to pay attention to. Needs to get through that 55 level. Not really any support down here off of 50. But 55, which I think I already have marked. Yeah, it's right here. So you're looking for a bounce out of this golden pocket. You could go into a smaller time frame here and put this in a box and just play the break. Right, that's your range right there. But so far it's doing exactly as we expected. So now we're looking for a break out of this golden pocket back to the upside. But if energy is bearish based on the sector sentiment, you'd watch for it to break to the downside. So Amazon earnings are on the 31st, I think.
Oh, sorry.
So yeah, 31st. Amazon, nothing's changed. So we expected it to come down, which it bounced off of that 180 area, pushed up into the golden pocket. It hit it right here. You need a close over 190 for upside. And if you don't get that, then most likely another pullback. But you have an order block right here. I'm pretty sure. Yeah, there it is. So there's the order block. So you have to close over this, which is basically 195 for that push to 200. But over 190, I like more upside. Under 190, you might get a rejection here. And you're looking at, there's 190. So you can see it's your biggest level of exposure. And then there's 200. So over 190, you could get more upside. Nothing's been confirmed. And then 200 is your next level there. I think T had some things he wanted to add. Were you saying something, T?
195 to me is the key pivot for Amazon upside.
Yep.
And then 190 bounce will just lead it into 195, in my opinion.
Yeah.
But rejection,
I agree with you.
Yeah, rejection 190 sends it back to potentially 181 or 180.
Yeah, and that would make sense because you'd have, if you reject here, then this is your wave.
Yeah.
And you're coming back down into this golden pocket down here.
Yeah, what would be wild is if Amazon makes it to 200 and then Bezos starts unloading his shares again.
Which totally could happen. He could be sitting there ready to sell again.
He's a fucking sniper, bro.
Yeah, it's ridiculous. So that's kind of what you're looking at here with Amazon.
Yeah, Amazon's pretty straightforward. I think it's the easiest setup.
FedEx and Mara. I think someone asked me about FedEx. I can't remember. I don't think I liked it. Let's see what it did.
Oh
Yeah,
yeah.
it's not bad. I mean, it broke out of the box. So, we drew the box last time. We said watch the box, right? If it breaks over the box, then you go bullish. Which if you did that, then you're good. You need to close over 276.85. And then the extensions come into play, which are 283 and 290, which gets you to the golden pocket. So it looks more and more like this is the wave. And it's trying to get into the extension here
Oh,
to the upside.
can I share my chart for this one? It's quite.
Yeah,
Wait one
yeah,
second.
I got you.
Oh, I'll just show you a FedEx chart. So it's really
Okay.
easy for this person who's asking. Okay, very easy. I swear to God, I keep my charts as simple as possible because it's just the easiest way, in my opinion. This thing is on a massive run, but because of earnings, it gapped down massively, and now it's trying to regain its upside. The key pivot
Mm-hmm.
is going to be 274 all the way to 278, somewhere around this level. If it can break above here and start making a base of higher demand, then it could set up for a multi-wave kind of a setup.
Mm-hmm.
Maybe a 5-wave combo that leads it back up here. If not,
Mm-hmm.
if it rejects here, then it's in trouble because it's going to come down and start squeezing sideways until it's forced either below 254 or it keeps bouncing on 254 or this 258 level here. Okay. So that's the upside downside scenario. Plan accordingly. My opinion, I would wait to see what it does here first. If it starts moving down, then I'm not even going to play this because it's going to be wound out for a little while. But if it moves to the side, then sure, I might take it if it bounces above this level. So the only viable good trade here is the bounce for the upside. Otherwise, I don't really want to play the downside. That's my thesis. Yeah, to get it. The risk to reward ratio.
Let me see what the data looks like on this one now. You got resistance at 280. So gamma resistance at 280. So you're looking at 280, which is right.
There is that big volume node down at 245 to 250. I don't know if it shows up on your scanner.
No, I wouldn't see it because I don't follow volume. But yeah, so I mean, you could also get a DTES situation here, right? Where it rejects here and then people get bearish and then they buy it up and then they squeeze it through. So that would be the other scenario you could get here. But I agree with T. It's going to have to close over this high. Probably pushes into 280, maybe consolidates here and then squeezes up towards that area. But all right. Mara. So I'll stand by what I've said. None of these stocks are going to make massive moves until Bitcoin breaks all-time highs. So just keep that in mind. With that said, I liked Mara down here. And if you've been in the group, you know that because we've talked about this countless times, sitting in this golden pocket. This is where we like to buy. This was alerted. So you can see the chart. If it breaks over this high, a push up into about 22, into this golden pocket area, about 23 to 24-ish. Makes the most sense. So you can see here the way we find that. This is obviously the high of the wave. This is the low of the wave. So you just retrace this move here.
Yep.
Right. And that brings you to your golden pocket, which is right here. So if this breaks over this order block, which is right here, then I would expect this to make a move up into 22 and then up into the golden pocket. So you would need to close over 24 to get that squeeze all the way up into the high, which is 27. So I do like this one, waiting to see if it's going to close over this order block this week and make that move up into that golden pocket area. So I think T said he liked crypto. I like crypto a lot. My second biggest position right now is coin. So I like the setup here.
Coin is wild as heck. It's been going on a tear. I took a bearish position and got burnt last 2 weeks or something.
So I sold cash secured puts at 170
Oh, okay, nice.
and then got exercised. And then now obviously now I'm sitting pretty.
Yeah, and you can, if you wanted to, you can just keep selling covered calls now.
Yep, yeah, exactly. So but yeah, again, off of the golden pocket, right? Out of that gold again, you guys will, if you guys follow, my style, I like to apply risk in these golden pockets. The longer the term, the better, because the bigger the move is going to be. And this was one of those ones where, again, I liked the setup. You can see here, it needs to get through this order block. Golden pocket sitting about 232 to 240. So still a little bit of room here to the upside. Obviously, crypto's pretty strong right now. So Bitcoin needs to break all-time high for us to really get going. If that happens, things are going to open up pretty quickly for a lot of these crypto stocks. Apple and Tesla. Okay, Apple has earnings, so just keep that in mind. But with that said, Apple's kind of like NVIDIA. It's knocking on the door, right? Trying to get ready to possibly break into this price discovery. We go back to earlier questions weeks and weeks ago. We talked about this setup, and this is like one of my favorite setups. So when you get a consolidation, you look for price to break outside of this consolidation, because institutions know that retail traders and all these stupid furus on Instagram, all they do is play support and resistance, right? It's all they talk about on Instagram. It's very simple, guys. All you have to do is wait for stock to break this level, and then you can fall down to this level, and then that level to this level, and this level to that level, and that's all you do, right? It's all fucking stupid. So what they do is they force price down. They get all these fucking idiots to buy their puts, and then they squeeze the fuck out. Right? It's the simplest way to put it. I can go through countless stocks all over the stock market and show you this exact setup over and over and over and over again, which is why you don't play stupid support and resistance like that.
Bro, on our Discord, we call it the under the ball sack scoop.
Yeah, I know. You always call it that. So, but that's what it is, right? That's what institutions are doing. They're forcing price down to trigger the stop losses because they know that retail's watching these key levels.
Yep.
And then once they see those positions come in, they just fuck the shit out of them, right? And then that creates the squeeze and the FOMO push, right? So Apple is no different right now, right? Apple did the exact same thing. Then it pushed to the upside. It broke over this, right? And now we're waiting to see what's going to happen with earnings. Earnings are here on the 31st, right? So they're next week. So you might get consolidation, you might get continued upside. If tech breaks to the upside over 500, I would expect Apple to go higher. Technically, you have a DTEF here and a pretty big one. Like, let me get rid of this real quick, right? If you kind of look at this, you have this kind of situation brewing, right? You have this high here, this one here, maybe. And then if this breaks through here, all the people that shorted this are about to get squeezed, right? And then to the upside.
Especially bearish pattern too.
Yeah. So that's the thing you got to watch here with Apple. So if you want to day trade it and you're like, well, I don't care about any of that, Andrew, I just want to day trade it for $3, over 237.22 is your pivot, right? Clear as day. You haven't been able to close above that. We take a look at the data. You can see the biggest gamma level here is 235 and 240. So nice little $5. You got 235 here, and then 240s somewhere up here. Just move this real quick so I can mark it.
Oh, I don't know if you guys have been looking at IWM too. Shit's been popping off.
Yep. So you could even use this little wave right here if you wanted to. You're like, okay, that's my high. That's my low. Oh, what do you know? It bounced in the golden pocket. That's so crazy. It's so crazy. Oh, what do you know? That 240 level just happens to line up with this fib right here. So again, this is a pretty right? That's your wave structure right there. And so a close over this, I'd expect to push to 240 over 240, price discovery up into 243, 244.
Yep, pretty straightforward. Apple's pretty straightforward.
Yeah.
Along with all.
All right, what else did I have? I saw something else. Tesla. Okay. Tesla.
That's holding
Oh
pattern.
my gosh, this one's super easy.
Holding pattern. Just
you're in the golden pocket. So again, this is where I like to apply risk. One of my largest positions. I've already scaled out of this quite a bit, but this setup is, oh my gosh, like DTEF all day. High, high. There's your two double tops, right? There's your pullback. If this works its way back and it breaks through there, it's most likely gone. Don't message me asking me if it's a good time to get in Tesla when it breaks 270.
But what will happen?
Yeah, I know.
It's
So this is easy though. You can see the consolidation. So put that in a box. If you're going to day trade this, just put this in a box and either play the highs and the lows or play the breakout.
Yeah.
Because now you can go into a smaller time frame and you can look at, right? You can look at all the rejections and everything.
Or you
Now from a
move in a specific direction, you catch the second wave in the play. That's how you two-wave confirmation, which is also just simple and easy. Break the previous high, bounce on the previous high, then you can enter on the second wave. It's very, very much easier.
Yeah. Yeah, two levels, 225 and 200. So 225 is already marked there. So don't got to worry about that one. And then 200 is also marked. So if it breaks this low and breaks the golden pocket, most likely down to 200. So what I would want, right? I want to see it force through, right? That way everybody gets bearish. Then I want to see it get bought up. Then I want to see it come back and create support here, meaning this is the stop hunt, right? And then when it breaks this high, then they squeeze these shorts, right? So that's ideally what I want to see happen. Like I'll draw it just so we can come back in 2 weeks and be like, oh my gosh, you did it. That's crazy. We'll just kind of, what do we think? We think like 206.91 sounds good. And then we come back and then probably make support here and then break through here and then probably squeeze up to like 240. So something along those lines. We'll change the color because I already have that white line there for the long term.
And so this and Amazon are both in a very tight oil right now, which are also the two sectors that we're watching.
Yeah, totally.
So
all right,
to understand the backdrop of the market when you are actually trading, at least you don't feel like you are unsure of what's happening. Largely expected that consumer discretionary is going to rally, right? Nasdaq's
yeah, I'm going to show you guys this one because we talked about it quite a bit in other sessions. Just to kind of give you guys a recap why I say don't short things in price discovery.
Oh yeah. Oh yeah.
Okay, so we talked about McDonald's. We said over 300 goes into price discovery. Now this is important because you can see the buyers coming in. So you can see the order blocks coming in price discovery. Then it breaks the high. You can see the buyers come in off of that 310 gamma level, right? And it goes higher. So this is where people get in trouble because they try to short stuff like this. They go, oh, but Andrew, it's overextended and now I need to short it because it's going to pull back. You don't know that. You don't know what the valuation that investors have of this company and why they're buying it into price discovery. So again, you want to be careful. You're not always going to get your pullbacks, but had you bought holding over price discovery, right? $16 move. So this is why we don't short things in price discovery. So don't short things in price discovery. That is the lesson. Okay. Here's another example of them forcing people to go short out of the range. You can see the circle there. Right? And then it breaks, and then you get your little bull flag set up, and then it breaks, and then consolidation, and then it breaks, and then consolidation, and then it breaks. Just forcing people to try to get short. Right? And squeezing them the whole way. So, all right. Here's one that everybody hates that is setting up pretty decently. Okay, I'm going to get rid of everything so you guys can see. It's not set up yet. Just know that. Right, this is for me. Okay, so here's the range. Here's the push out of the range. Right, there's the range. There's the push out of the range. If this gets bought back up and creates support back in the range, this is your bear trap. And then Boeing might get bullish. Everybody hates this stock though. So, but it is one that's setting up like that. So this also, if you go into the long term, is in the golden pocket. So again, this is where I like to apply risk. Easy evaluations. Okay. All right. Is that all the tickers? That's it? That's all you guys got for us?
Wow.
Nice.
Anything else I was going to mention? I think gold was the only thing is pushed pretty high.
Google's still one of my favorite setups.
Google?
Yeah.
Oh, yeah.
I still love Google. So it did reject exactly where we talked about. Like you guys were at that session, you can see here. You know, I don't draw these lines after the fact. These lines are all drawn before everything. So perfect rejection there. Does it come down further? Do they bait people with the head and shoulders? It could bait people with the head and shoulders. Right? That could be a bait for like for earnings, like all the stupid retail traders that are like, "Oh my gosh, guys, earnings is going to be bearish. There's a head and shoulders pattern." And then all of a sudden it's at like 200 when the earnings report comes out. Wouldn't be surprised. It still needs to get over 165 for a push to 170. Nothing's really changed there. You need to break 160 if you want downside. So, but I still like Google. I think Zillow was one that we talked about too. Yeah, good bounce. Not quite there yet, but 65 is still there.
Yeah, Zillow we spoke about last week. Decent bounce.
65 to 66 still looks likely.
It looks like it's consolidating into a flag node of some kind.
Into a bear flag?
Not black bear flag, but like just a
bull flag?
yeah, like bull flag.
Yeah. Yeah, I still think you probably hit 65, 67. Yeah. T, they want you to walk through a debit spread on NVIDIA.
Oh, yeah, sure.
I'll hand it off to you.
Okay. Okay. Let's say we want to set up a NVIDIA that's right. So you have a bunch of options flow that is betting on 150, 140, 170, 180. Essentially, all of these upside targets are being bet on, okay? Which is the reason why I'm saying that there is some money to be made here. Now, one of the things that you can do is set yourself up with a debit spread where you are going to buy and sell an option that is in a specific range. That way, as long as you are within the top end of that range, or if you have broken that range, your debit spread will pay out the max. So the idea is, let's say you buy a spread between 150 and 155, and NVIDIA breaks above it and goes higher by that time, then your spread will pay out max. So you kind of want to have that kind of a scenario for yourself. So you don't want to go too out the money. And the beauty of it is that when you are orchestrating a debit spread, it's going to likely be cheaper. So that's the benefit of it. So now if you look at this, let's go into, I think, the right time frame here should be at least January. So let's say we go into January and check that out first. If you are trying to do a color option. Well, okay, my label doesn't allow me to do that. But you can just see here. So let's say you buy the 150. Let's say you buy the 150 call, right? And you sell the 155 call. So essentially the cost of the trade, right? This is about $1,000, right? $10 contract. So you're buying the contract for $10, but then you're selling the 155 and taking the $5 profit between these two contracts for a total. That means when you sell this, you'll get $8 right off the bat. You're actually only paying $1.30. So $130 for this exposure. And that will give you exposure between 150 and 155. Okay, now very quickly, I'll pull this up on my app here to just give you a better understanding of what returns that is. I can do it in my app for much faster. But essentially, you can set yourself up there for like a 150, 155 call. I think that's pretty smart. If you want to go even further out in expiry, I think that's also possible. Like March, perhaps. So here. And then here. Okay, so each contract will cost you roughly $1.60. Okay, and the max profit per contract is approximately $320. So you're basically operating from a 1:2 risk to reward ratio for this specific contract combo for January expiry, 150, 155 debit spread. Okay. Yeah, I think that makes it very clear and simple to understand. So for those of you that don't know how this works, you buy the 150 contract, that will cost you about $10. Okay. And then there's a 155 contract. That means you're capping your gains here to take this profits if NVIDIA moves up to here and breaks above. Okay. And essentially, if NVIDIA breaks to here, then you've only paid $1.60 because you will sell the 155 contract and you'll go short shares here. Here is where you go long shares. So these two contracts will kind of cancel each other and you'll only pay $1.60 for that exposure. Is that clear? JP, did I answer your question? Did I explain it? Essentially, this contract you sold will fund the $10 and you will only pay $1.60. A much cheaper trade for those of you that want NVIDIA upside with options. Okay, great. I think that's it. Andrew, you have anything to add? I'm still processing a lot of weekend reports that have just come in. There's a shit ton of them, so I'll be doing that before market opens. And I'll give you guys any updates if I have any.
No, I don't really have anything else. The only thing I would add is that, I mean, we're not seeing downside yet, right? Like people might be let me in here real quick. Right? People might be on social media selling fear, right? And getting people to think like, things are bad, but you can see like they're still bullish, guys. Like they're not. This is Friday's flow. Like Friday's flow is bullish. There's no puts being bought. In the last 5 days, yes, there's been some bearish positions, but I mean, overall, the market is still like there was 100 million, right, in puts, but overall, the market is still bullish. They're buying the dips. So going back to dealer environment, it's still a buy the dip environment until we break below that 580 level. And then that buying pressure kind of goes away and we'll see what happens. But till then, still feels, I mean, so far it's doing exactly what was expected. You need to get over 120. I assume it's going to get bought here, but it depends. It needs to get back over 120, but so far it did exactly as expected. So it can work its way all the way back down though to this golden pocket. So if it breaks below 120, it'd come all the way down here. So yeah, so I'm still bullish on the market, and we'll see what it has in store for us. I mean, so far it's been pretty good. We'll see if we get over that 585 level. So
Yippers. We'll see
all
y'all
right.
the Wednesday one. I know I missed the last one, but this week I'll be there.
Oh, I didn't even do a Wednesday one. I took the whole week off after Monday.
You know that I fucked my wrist. It's so fucked. It's so swollen.
So Monday hit 585, and I was like, well, guys, that was the plan. I'm done. I'll see you guys on Saturday when I build it.
All righty. See y'alls.
All right. Later, everyone.
Bye.